Welcome back, everyone. It is our favorite time of the month. It is the FOMC meeting, and I am Tom Crown, your guide through the Federal Reserve's gibberish talk. I'm glad you're all here. We have 420 viewing before it even started. Pat yourselves on the back. We did it. Let's get 420 likes. I have a feeling we're going to blow way past that today. Last month, we had, that's right, over 5,000 viewers for this. I don't know if we're going to be able to beat that, but we'll give it a try. We're going to do it with your help, so share, like, subscribe. We'll be trying to shout everybody out during the lives who does. We're going to do our best. So today the Federal Reserve meets. There's a video pinned to the top of the chat, a little explainer on the Fed. This is a hype day. We typically see very high volatility, and I, in typical degen fashion, just kidding, I don't really do degen fashion normally, I have a short position open. Will I get liquidated? Probably. We'll see what happens. Today, remember, these meetings bring high volatility. I do not recommend trading during them. It's best to kind of let the dust settle after. We're going to take a look at what Chairman Powell says. We're going to see where our interest rate hikes are coming in. 50 BPS is what the market is expecting, with a tiny percent chance of higher. However, we've seen PPI data came in hot. We had wholesale inflation up, while CPI data came in, I think, yesterday. Let me pull this out. Came in yesterday, and we had that a little down. So the difference is PPI data is the wholesale inflation index, while CPI is the consumer price index. Really, both of them, I don't believe, are very good metrics. I think M2 supply or M1 supply is really where we want to look for inflation. But hey, we don't get to write the rules. We just sit here and hype the chat and watch live. So if you're watching this in the future, you can skip ahead. There is a time stamp for when the interest rate will be in. That'll be at 2 o'clock. And at 2:30, Mr. Chairman Powell himself will grace us. And if we're lucky, we'll get a sighting from Gina. I'm praying. Gina is my love. She might be married to a wonderful woman who I don't know her name, but time will tell. Time will tell. Keep rooting for me, guys. So, yeah, 600. We're blasting off. Let's go. Lynn, thanks for subscribing. Islam Quashari, you guys are awesome. Didn't even start the stream yet, and we already have subscribers. Great to have you. So, on this chart, I have labeled out when the stream starts, when the rate hike is in, and when Mr. Chairman Powell is speaking. And so, let's get into the things that we always get into, right? Let's take a look at the dollar. We've been long tracking the dollar, and it seems to be the most impacted by these meetings. As interest rates have cranked up, we have seen the dollar gain strength and then kind of unexplained, or really we don't know why. In October, the dollar seems to have lost its parabolic rally here. We can see that started behind me at the start of 2021, and it looks like back in October, November, fell out of its parabolic trend and is now back at major support at 103.8. With the market looking for a dovish meeting today, we may see more weakness in the dollar. On the week, we see what we kind of speculated about in the last stream. The dollar is broken below its local weekly support and is now testing a major support. In my opinion, this is a break of structure. We do have a change of character, perhaps. Looking at stocks, not a lot going on, it seems. You'd expect a little more volatility. S&P 500 is up 0.5% today. Let's zoom it in. Really not looking super great here. Opened high, dropped. I was reading articles that were saying stocks were rallying in preparation or something for this. Doesn't really seem like it, to be honest. They are down for the day, but up over yesterday, so I guess in stocks, that's a win. Let's zoom out to the day. I'm still looking for a potential inverse head and shoulders here. Need a test of 4,300 and then a higher low after that. So far, so good, but we're not there. Maybe if we come in cooler, we do have a poll going. Please vote in the poll on what the BPS hike is going to be. There we go. We got subscribers. Sophos, Zelos, Hayden, Reggie. Well, who else? We got a lot of new faces today. Welcome, fam. M. Lind. I think I said that one. A lot of new faces. Love it. Keep smashing the likes and subscribes, guys. The more you chat, the more you vote in the polls, subscribe, share the stream, the more engagement YouTube sees and says, hey, people are enjoying this. I'll show it to new eyes. Let's get trending on YouTube for once. Let's get on the front page, right? That'd be dope. We can do it with your help. Real quick, shout out to our sponsors, Bybit, BingX, and Market Cipher. Links in the chat in the video description below. Excellent top tier exchanges and trading tools. And that's done. That's done. Oh, keep hype in the chat. I love it. I love it. Good news. What's up, man? Hendrik, good to see you, brother. Trendy. JK. Mods out there, let people spam today. The more chatting, the higher the chat rate, the better for the stream. So unless people are saying weird stuff, let them go on the spamming. There we go. What's up, Lundros and M. Rogalik? You guys are awesome. NASDAQ. Looks like yesterday settled up at exactly resistance. I didn't expect this. 12,169. It's nice, 69. Nice. And now in the same condition as the S&P 500, slight green day. Looks like about 0.5%. I'm actually underwhelmed by this. We were looking at kind of correlations in the last stream. Dollar versus Bitcoin versus, you know, all these commodities, assets, etc. And we were saying this correlation doesn't really seem to be holding true anymore. Everyone was so positive that these things were reality, and it seems like that reality is crumbling. What is up, Joe and Wojtek? What's up, my mangs? Good to have you. Seems like that's crumbling here as the dollar. Maybe if we can pull up the dollar on its own. Let's pull the dollar on its own. What do you guys think? We'll do it. We'll do it. It's a good day. It's the day. It is the FOMC day. Mr. CHERPOWWWWW will be answering questions and probably just dodging them. Dollar is down. Stocks are up. Okay, fair enough. But this, not even a lower low versus yesterday. I'm not convinced yet. Maybe that will change as we get closer to the meeting. Reminder, we got about 50 minutes until we have the interest rate decision, and it comes out at 2. It gets published to whatever sources. For some reason, they don't just put it on their website. I don't know. But they publish it to news sources. So what we do at 2 p.m. is we all open up a Google tab and we try to be the first to know the interest rate decision. So with your help, we will keep that chat hyped. What's up, Matt Miller? The Creature of Jekyll Island. I've not read it. I've not. Where was I? NASDAQ, 0.5%. Does seem kind of overall that stocks indices are up about 0.5% on the day. US 30, 0.6, US 500, 0.5, Dow Jones 0.6, S&P 500, 0.5. S&P 500 VIX down. Not a surprise, as we haven't really seen a lot of volatility today. Let's check out the most popular news. It's all going to be about the Fed. Wall Street rises as Fed rate looms. We were saying this last stream. What are these news articles on? It seems like maybe they're AI generated. Wall Street did not really rise. Nothing has happened. In fact, I mean, they're up for the day, but I wouldn't call 0.5% a rise, right? Fed decision, China stops counting. Stops counting what? I don't know. What's moving markets? Federal Reserve is expected to raise the target rate for Fed funds by 50 basis points to an upper limit of 4.5%, surpassing our 4.20%. That's terrible. Terrible. Terminal rate 420 forever. China giving up. Counting COVID cases. I didn't know they ever started. They really didn't seem like they ever started. Stock set to drift. Boring news. Boring news. Give me something spicy. Spicy. Dow cuts gate. So here's like a contradictory article, although that was 20 hours ago. Maybe we get a latest. Wall Street steady. So we have Wall Street rises, Wall Street looms lower, and then Wall Street steady. So one of these 3 articles has got to be right. One of these 3. We'll get it. They'll get it. You'll get it, guys. Actually, this is very interesting, and I did not expect this. Dow Jones here, man. Setting a higher high yesterday. Did sell off. It opened higher, fell down. Now trading at 34,300. But this is very odd to me, chat. Let me know what you think about this. It looks like maybe even a break of structure to the upside. This is weird. We were looking for maybe this pattern on S&P 500, and Dow Jones seems to have beaten us to the punch. I'm definitely going to set an alert up here just above yesterday's high. There we go. We got thousands viewing now, guys. Get hype. Get hype. Smash the likes. it's going to be a long stream. If you have to go during a stream, don't worry. If you could, leave the tab open, and if not, well, it was good to have you here while you were here. This is interesting. If we trace this trend line all the way back to 2018's high, connect it to the pre-March 2020 crash, we can see we fell below this trend line in May. We kind of faked out in August, hitting a lower low, but now into a higher high. This actually sets Dow Jones really far apart from the other indices. This is odd. There's Dow Jones. Let's pull NASDAQ up again just to double check. I'm not crazy. I'm not crazy. What's going on here? What's going on here? No higher high on US 100, yet Dow Jones. Breaking structure, looking like it wants to paint out that inverse head and shoulders. I am very surprised and don't know what to do with this information. Let's move on. Going into Forex, because Forex is going to be in the light today. The monetary policy / interest rate adjustments that the Fed has made over the last year have been wild. They have caused chaos in markets. We've been watching these live, by the way, guys. We are the original FOMC streamers. We've been doing this for over, I think, 2 years now, back when nobody cared, nobody wanted to watch them. But we have been here faithfully watching them and trying to make them interesting. That's our only goal for today. That's it. We'll see. GBP. GBP has been on course. We pointed this out in the stream the other day. We're looking for a measured move to the upside at 1.25 to the dollar. We called this all the way back here at under 1.14. We had a flat top with ascending lows. We're looking for a break to the upside, and 125 looks like it's in the cards now. As we reach up higher, a little weakness in the dollar here, likely to push the British pound to our target. Then maybe looking for a retrace back to 1.14. Time will tell. That might be a little ahead of the game. One thing I do want to note, this ascending channel, don't love it. This is on the daily time frame, and I don't love this ascending channel. We do expect those to break to the downside. Says probability, but probability doesn't always win. Something that we talked about too is I love this V-shaped bottom. We just put out a video on swing points, a little educational short. You should check out our playlist when you have a moment. I love this. I wish we would have seen this on Bitcoin. We don't, unfortunately. But that is a nice capitulated bottom. It's right at 1, just right above 1. Very prime spot to see that happen. What's up, Nitin Mehta, Ruhal, Jirio? Thanks for subscribing, guys. If you're out there and you haven't subscribed, hit the likes. What are you waiting for? What are you waiting for? You know what I realized? Euro isn't even on here. So when we look at the Dixie is a basket of 6 major currencies, and the heaviest weighted one is the euro. So this is the big player. If the euro gains strength, typically we look for the Dixie to have downside price action. And I guess that is what's in the cards. We were looking for the same pattern on the euro here. It played out. It traded below parity. It does look like it's inching its way back up. Man, these Forex pairs look way better than everything else. And that is upsetting to me because I don't really trade Forex. Man, a lot of money on the table there. Looks like we're moving back up. We're going to have to go to a higher time frame, though. Let's see. Dang, yo, look at the euro. Euro kind of looks like it bottomed out, didn't it? Remember, none of this is financial advice. I'm just walking you through my own thoughts and my own opinions on charts. And I like to do it with you guys around because it's boring by myself. I used to do it all the time by myself. We do have a monthly order block sitting right here above price. I don't know why we have this line here, but let's adjust that to 1.07. Didn't really move anywhere. Likely to find some kind of profit taking or resistance here, but I'm really liking the beat of this drum. We do have a descending high trend still in play on Euro USD, and at the moment, that's about 1.14. So that I could see it moving to there, especially if we get a very dovish speech today. But man, moving past there would be hard in one move. Backtracking a little bit here. Today, the markets are pretty sure of 50 BPS, and to be honest, I put the poll up, but that is of my opinion as well. I think we're going to get 50 BPS, but we have more. There's more to it than just that. 50 BPS, cool. If they come in high with 75 or 100, which I think is very unlikely based on the CPI numbers, expect markets to tank. That's my opinion. Expect them to tank. If somehow they come in lower at like 25, I expect to see a very large rally, but I don't think that's very likely either. I think 50 BPS is it. But the extra little tidbit here is the forward guidance. So this is a tool the Fed uses, forward guidance, which is essentially when they say, hey, this is what we're going to do, right? In the past, this has not been a great, I mean, it hasn't been very truthful, I want to say. If you look back at the Fed statements, like there is no inflation. Okay, there is inflation, but it's transitory. It's mild. Okay, there is inflation and we have to do something about it. It seems like they're always kind of lying to our faces. However, they have been true to what they said they were going to do. Every FOMC meeting, we've heard them say, numbers aren't where we want them. We're not going to stop raising rates. So in that sense, they have been truthful. But the forward guidance today, I think, is going to be the player. I think it's going to be the real player. What we're going to be listening for is the tone, the language, and the future projection. Do they see these numbers cooling into 2023? Do they expect these numbers to continue cooling? On top of that, we're going to be listening to, do they expect interest rates to continue raising? I would bet yes, but it does depend how they go about it and the kind of the time frame. If they say far into 2023 or throughout 2023, those are going to be words and language we're going to use and we're going to be paying very close attention to. Should have said that in the beginning. Is what it is. Man, I'm hyped, man. I haven't been hyped in a while. We had a pretty hype stream the other day. Euro USD is looking super strong. Loving it. That is directly impacting the dollar, as the euro, I believe, is 50-something% of the Dixie weighted basket. Within that basket, we also have the CHF, the CAD, the SEC, GBP. Oh man, am I losing it here? I need to make a video on what is Dixie, even though I did a long time ago and it sucked. We'll make a better one. Here it is. Let's pull it up. Euro, Swiss franc, yen. Okay, I was right. We have the yen. The yen, Canadian dollar, British pound, Swedish krona. All right, we had them all. We used to have the Chinese yuan here, but we took it off because it's not relevant to the dollar directly. Certainly it is indirectly. Let's take a look really quick. Peso is not in play, though peso oddly showing the most strength still, I think. CHF, we haven't actually looked at this one during our live streams because it's not a large point of the basket. We haven't looked at it too much. Did hit a low, bounced up. What we're seeing across the board on Forex seems to be in October. Some pretty solid bottoms were put in. We see this on almost every pair, if I'm not mistaken. The Canadian dollar A, being kind of the lagger here. It did put it in the bottom in October, but it's really failing to reach higher. It's interesting as Canada is the US's largest trading partner in the world. Fun fact. Clear resistance is 7.5 right there. Boop. And I guess we're going to be looking for support down here. Do we have anything looking left? Not really. We have this range, but it's pretty undefined here. It's not a clear-cut range. Maybe if we go to like a monthly time frame, we'll have something better. Let's check her out. How do you guys like that hype intro? I want to play it again while I think. That's right. Get hype. God, I love that song. That was made for our channel by Axel Boy. Shout out to Axel Boy. He's on SoundCloud. Great dude. I guess he's very big in Europe. I like that jingle, man. So I guess the CAD does have support here, 68 cents. Or 68 to 1. It does seem back in 2016 that was its wick low. I mean, we can use these monthlies here, perhaps. That lines up pretty good. Honestly, if I look at this chart, I would say it doesn't really look like the bottom is in for CAD. On the monthly time frame, unless this lines up really well. Maybe it does. Yeah, maybe it does. All right, I retract that. 71.5 actually does look like pretty solid support. I didn't see this monthly back here. Double bottomed. And we saw some kind of rally, but man, it's struggling. It's interesting to me, and I don't really know why the CAD is lagging behind everything else. The peso not in the Dixie, although Mexico is I think the second largest trader in the U.S. Something like that. Following our TA being very simple here, we're looking for it to follow kind of the GBP, the euro, with a flat topped ascending low pattern. Except the difference is the peso, this is a 2-3 year pattern, whereas those were a few weeks at most. I'm expecting maybe this is it, this little bump here and higher highs. Don't have an alert, but now I do. Alert set. Let's rock and roll. Akbar Traveling Guru, what's up, man? 63 Hamfer, Infinity Cycling, Symphy Raymond. Man, we got so many. I can't even keep up. Can't even keep up with all these. Nitin. Yeah, I'll get to him later. If you're out there, keep subscribing. Ramiro Guerrero. Remember Ramiro Guerrero? What's up, my dude? Good to have you all. Okay, what is up next on our plate? We haven't even looked at Bitcoin. Bitcoin looking to, it appears, stop out my short. Maybe I should talk about my trade a little bit. Really, really risky time to trade. I did it because it would be something to do during this live stream, and I think I'm going to lose some money. A good reason to never just copy my trades because, man, doesn't always work out. Here we go. Bitcoin moving up 18.2K. Just shy of my stop loss. Just shy of 18.3. Does look like Bitcoin has some upside for us into this FOMC meeting. However, what we have seen very regularly in the past is this. Let me zoom her out here. Get on the just Bitcoin. We have seen during... Wow, I'm going to get stopped. Let's go. Bitcoin running. All right. Steve, Ultra Chaos Steve, our optical art, not Ultra Chaos Steve, optical art, has some charts for us I'll take a look at in a minute. I want to warn you guys, though, we have seen this happen often. Bitcoin will run one direction up into these meetings or into the rate hike. Into the rate hike after it's decided or after it's published, we've seen that typically reverse. And then as Chairman Powell talks, we've seen it reverse again. So these are very high volatility times to trade. And honestly, I wouldn't recommend it. And you can see why, because I'm literally about to get stopped this moment, this very moment. Wow. This was an ill-advised short. We've been winning all these longs, and then I go short and crapped. Oh well. Life goes on, right? 18.3, and I am out of this position. Steve had some charts he wanted to show. Let me see. I got to pull them up. Whew. It's a day. It's a day, guys. Keep hyping the chat, please. I appreciate you. Let me know what you guys want to look at. I'm going to read the chat in a minute. I got to find this chart. I promised Steve I'd look at it. Let's see. Steve has some targets for us. His targets being, we have 18.3, looks like G1. 18.8. And then 1960. 1960? Let's pull one of these bad boys up. Let's see what it says. Ooh, nice colorful charts. I will say Steve has the most colorful charts. 18.3. That is pretty much where I'm looking. That's where my stop is. Do I want to adjust this maybe? Maybe I'll do like 18.3. Yeah, let's lose a little more money today. Gonna get wrecked. If you guys haven't checked out Steve's channel, opticalart.com. He's a good dude. I'm the perma bull. He is the perma bear. If you're into the bearish TA, he's got it in droves for you. Check him out. And there we go. Just below the stop. Oh my. Oh my. I'm going to zoom out. Actually, not on this chart, because this chart is just for keeping track of the dollar and Bitcoin during the stream. Let's do this. Let's do this, guys. Oh, I'm ready. Okay. Wow. Wow. This is not looking too bad. Not looking too bad, actually. I'll take it. We had 18.5 on our chart from our last stream. This is very good news. This is good news. We have overtaken the 50 daily moving average on Bitcoin. That's great. We lost it during our fall to 15.5 in November 8th. And here we are, December 14th, back above the 50. I'm digging it. The 100 daily moving average chilling up here around that 18.5. Around that 18.5 target. Somebody's ready. Are you ready? Are you ready? This is kind of the area we were looking for resistance. If we look at our chart, this is where we consolidated before dropping lower, and a back test, which we haven't actually gotten as predictably as we should have. A back test of this area was very likely. This is where liquidity is sitting if sellers wish to keep dumping the market and be ready. Oh, that's why. That's why. Christian Santos, my man. Thank you very much. Christian Santos gifting 10 memberships to the crowd. I love it. Nate, my boy Nate. Congrats. Hendrik, congrats. Crypto Surf, geez. 10 is a lot. Robbie, dude, it's like all some of my favorite names. The Pickle, Sock Sanity, Bad Baptist Epidemic, Santa Shivu, and Victor Wong. I'm going to turn that off because 10 times in a row is a lot of times for that to play. Congrats. Thank you, man. Christian, that's awesome. I appreciate you so much. That is so nice of you to do on this hypest of hype days. Huh. Viewership is fluctuating, but we have 600 likes. Can we get to 1,000? Can we get to 1,000? I wonder. Resistance. Here we are. Previous support, backtesting as resistance. Will we break it? I hope so. I hope so. I think it will largely come down to what is said here and what we find out in the next 30 minutes. We are just 30 minutes away from the interest rate decision being in. We've already got 1,600 viewers, 700 likes. I'm digging it. You guys rock. What are you guys doing in the chat? What are you looking at? We have 1,500 votes on our poll, guys. Reminder, please keep voting in the poll, chatting while we're live. Share the stream, like the stream, subscribe, etc. It helps hype the stream up, and you guys are doing an awesome job. Scott Lux, have I fixed my car? No. Long story. I got a new radiator, but the mechanic, yeah, I'll tell you about it later. What's up, Poppy, Mr. Shring Tech? Hola, my friend. Tor, Wolfman, Zeph. Sean, let's go, baby. That's right. Real Rafa. You'll take a membership. They are randomly gifted out, but YouTube says that the more you engage with the stream, meaning liking, subscribing, chatting, the more likely you are to get it. Die Cool Palm asks, are we bullish? That's a hard question, my friend. Are we bullish? Right now, it certainly feels that way, right? With this candle, it certainly feels that way. Let's take a peek. Let's take a peek at what we got. Let's get rid of these little ones. We are right to the 5 weekly MA off the 10, but I don't really use the 5 and the 10. What we got here above us at 19.5 is the 20 weekly moving average, and this has been no fun, not gonna lie. Let's throw Bollinger Bands on. We have been rejected from the 200 20 weekly. Sorry, 200 daily. 20 weekly since March of 2022. We hit it again in October and fell. This was actually very bearish. As you can tell, we hit 15.5 in the previous bear market. The 20 weekly was pretty much all we needed to look at. Rejected, 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 rejected before falling lower. But once we retook it, and this is where it gets kind of exciting, is once we retook that 20 moving average on the week, we began to rally again. As soon as we fell below it, price action got limp again, and we rode it back up into 2021. So this is a pivotal point on the chart. The 20 weekly is huge. It's a huge place to overcome, and that sits just above. I guess maybe we'll make this a little bigger. I don't want to make it bigger, but there we go. We made it bigger. A giant zone of resistance. So are we bullish? I would say not at this point, not yet. Doesn't mean we can't continue up. But at the moment, it's hard to say that we're bullish simply from this rally. We have fallen so much from 69,000 noise down to 15. We have a lot of ground to make up. A 77.5 or 77.7% retrace from the high. It's actually mild when we look back at previous bear markets. We typically have seen 85%, which unfortunately 83, 85, 84, unfortunately points to 10,500. Now, that definitely is a major support and a very important level to the Bitcoin chart. Let's just place this on here. Boop. There we go. That was our high. This is on Binance. On Coinbase, this was a double top. And I think on Coinbase, this held better, actually. But this is a very major point in the chart. If we touch this point, I don't believe we go lower. It definitely is possible that we get there, and anything is possible. We could go lower. I'm skeptical. I will warn you. I've been skeptical of many of these falls, and I've been wrong. This is how it goes. This is how it goes. The bears were right all through 2018 and 19. The bulls were right in 20 and 21. And then the bears were right again in 2022. So that's how it goes, man. That's how it goes. When you're looking in one direction, eventually you get it right. I would say, in order to really be bullish, and this is going to not feel good to hear, we need to see higher numbers. I would take above 39,000. Start getting us back on track. Like, we have a lot of upside to go before we can be super confident. At bare minimum, 20,000, 21,000. Take out this high from the drop in November. That would be a great start, but we're still so far from there. It's hard. It's hard to say we're actually bullish. I would love for us to be. And we are pushing into resistance here. Let's zoom down. Bitcoin seems very excited. Seems very excited for this meeting. I'm digging it. Of course, I'm in a short that is very close to being stopped out. That is the way it goes, isn't it? I would gladly liquidate my entire account here. This is on Bing X, one of our sponsors. I would gladly have all of this money liquidated if it meant we're back in the bull market. I don't know if it works that way though. Probably not. We may watch this get stopped out very soon, actually. Wow. Inching on up there, 18,200, pushing into resistance. One really good takeaway, though, is we are above the 50 daily moving average. We have really struggled to hold that level. Really struggled. Let's hide this. We can see the 20 down here. We popped above it on the 29th of November. We tested a support twice in December before moving higher. I want to see it close above the 50 weekly, but honestly, the 50 weekly is just the beginning. I want to see the 100. I'd really like to see the 200, and it's interesting that these moving averages are kind of sitting at those important price levels. Like the 200's at like 21, the 100's sitting at like 19, and the 50 was at 17.9, but that's behind us. And dang, if I'm not going to get wrecked here, I'll take it. Wreck me, market. Do it. Do it. What's up, Jay Fresh, Tom Hall, Lori Dree, and Christian Santos subscribed after giving away those memberships. Wait, did someone else give memberships? It said Christian did, but now it says Mohammed Shaban did. And I think, Mohammed, you gifted some last time, the last FOMC meeting. I apologize if, I don't know, it told me Christian did, but now it's saying Mohammed did. You're the man. Did I miss anybody? My thing, there's like so much going on. This thing is bugging out. I appreciate you either way. And here we go. Let's take out my short. You guys are ready to watch me lose money? I'm ready. My body is ready. 26 minutes to go. 26 minutes to go. And we are drawing closer to our rate hike decision here. Let's put on the 5-minute. On the 5-minute chart, there we are. We can see actually a pretty close correlation. Got to be careful when we talk correlation. We see a pretty close correlation right now. The dollar pushing to a new low as Bitcoin pushes to a new high. I would love for these to be trading opposite again. I don't know if we're that lucky, but I would love to see it. The dollar definitely pushing down lower here after a pretty ugly consolidation. Look at this, actually. I haven't looked at the dollar on low time frames. Look at this. That's pretty gross. Rounded top. Actually, I see it like this. This is on the 1-minute chart, so act accordingly. We had a flat top with ascending lows. I would have looked for that to break to the upside, but it looks like could not find the strength. Now it's pushing down lower. What's up, James 2, Jamie Ventrelli, Bud Steen, my man. Bud Steen, how you doing? We have thousands of viewers, guys. I love it. I love that we're able to take such a boring thing and make it interesting. I'm doing my best. I'm doing my best to keep it interesting for you. Sometimes it is, sometimes it isn't. The dollar, though, is looking to break its low on the hour. That's not even a day. We were talking about this earlier. We said the dollar hasn't broken to a new low today, and it looks like that might be about to happen. Let's put it on the hourly. Jeez. It's been a while since we've seen green. It's uncomfortable, isn't it? How do you guys feel about this rally? Let's close that poll. Let's open up another one. I want to know how you guys feel about the rally. Do you think it's real? Do you think it's fake? There we go. I'm getting stopped out. Watch me lose money live LFG. Let's go. Let's go. I might close up that poll. 1,800 votes. You guys rock. 61% saying 50 BPS. I think you're right. I think you're right. Ooh, my caps is on this. Bitcoin rally is real LFG. Bull. Trap lol. There we go. Vote in the poll. I guess my short holds on a little bit longer. I'm definitely going to get out of this, though. I'm not holding this past like 34. In fact, I kind of want to move my stop down lower already. I'm already not liking the vibe. Not liking the vibe. Bullish or bearish? Vote. 125 votes just like that. 73% saying bull trap. You know, here's what I will say. In the past, I said this earlier, but people are joining us, so I'll reiterate. In the past, into these rate hikes, what we've seen very often is into the rate hike, we'll see price move one direction. Sometimes it's up, sometimes it's down. As the rate hike comes in, we typically see it reverse, really regardless of what's going to happen in the macro. We've seen this almost every time. It reverses into when CHERPOWWW speaks. So if it's moving up, it starts to move down. And then when CHERPOWWW speaks, it starts to reverse again. And so what we get almost always is a huge liquidity grab. It could look something like this. We see a whipsaw with a wick to the top, gets sold off, or a wick to the bottom, gets bought up, and then typically goes right back to where it was, and it makes everyone annoyed. Pretty much. Love from Kashmir. Love the Kashmir, my friend. How you doing, Sahruk? It's good to have you, man. Will I interview Gina? You know what? We should tweet Gina during the FOMC meeting today and ask if she'll come on the channel. What do you guys think? I'll need all you guys. I'll need you all to retweet, hype it up. She's a pretty powerful lady, Gina. She's as beautiful as she is powerful. It's going to be hard to get her on. But if we did, that'd be wild, wouldn't it? I think we can do it. If you guys help out, we can do it. Dollar breaking to new lows today as Bitcoin pushes its high. This is getting spicy. This is getting real spicy. I knew it would be. Yes, please. Done. Financial blue balls, says Michael. That's pretty much what it is. Trading blue balls. Gina blocked you. You guys better be respectful to Gina or I'll come to your house and beat you up. She's a lady. Treat her as a lady. We need a male Gina. Steph, right here. Right here, bruh. Right here. Time to be on the longs and shorts at the same time. True. Possible. Honestly, I don't recommend trading into the meeting. I fully expect to lose money on my trade. Fully. I fully expect to get stopped out. I'd be lucky if we didn't. I'd be very lucky if I didn't. That's so weird. Muhammad, I'm sorry. It said it was Christian something gifted those subs, but Muhammad Shaban did. I don't know why my thing said that. My apologies, man. I see it here now that I pull the chat up. Gina for the win. That's right. Cheap vlog. What's up, man? AJ. Don't short the pump, AJ says. Gina on the show will generate 10,000 likes. Whoa, you're speaking my language now, man. YouTubers and likes. It's like moth to a candle. Moth to a candle. It is Gina with a J, but we say it with a G out of respect. Because she's a G. She's a G. All right, what is going on? What is going on? We got 20 minutes. What do you guys want to look at? I'll pull up Ethereum for now. Ethereum. You guys love your Ethereums. Last stream, we were looking for Ethereum to paint a flat-topped ascending low pattern. So I was picturing it this way. Now that we have hindsight, which is always immaculate, it looks like it played out a little larger than we were expecting, kind of breaking the low, but still holding that higher low bottom with a flat top. It did break out. We didn't get a clean back test of our high. I was looking for a back test of 1300. Didn't quite happen. Didn't quite happen. We were on the right track, but we had the wrong direction, I guess. 13.5 being yesterday's high. We've retested it today. Ethereum's looking pretty darn good. I told you so. I hate when people say that. I've been saying for many days now that Bitcoin, and so it also appears on Ethereum, is in a very obvious pattern to me. Looks like an inverse head and shoulders. 1, 2, 3 tops. However you want to call it. Doesn't matter. And we consolidated below resistance. Ooh, that reminds me of something really good to show you guys. We were waiting for a breakup. Looks like we got it. I'm not ready to celebrate yet, but I'm still feeling amped. Ethereum's testing yesterday's high. I'm looking for 1,420. That'd be a nice test of previous support as resistance. Ethereum still has a long way to go, though. I mean, similar to most of these charts, you have a descending high trend here that's going to act as resistance on the way back up, and we're not even really close to testing it yet. So what I discovered on stream, this beautiful chart. So this chart might look familiar, but it isn't what you think it is. This is Bitcoin's market cap. This is a little bit different than its price. Its market cap is essentially, you can derive its price by how many units of Bitcoin exist, which is a dynamic number. It is always increasing with each new block mined. We have 6.25 new Bitcoin until the halving in 2024, when it becomes 3.125 or something like that. Something like that. But basically, looking at this chart, we found some spice in the last stream. If we look at 2018 or 2017's high, this was when Bitcoin was at 20K. The total market cap was 334 billion. If we look left, we find something very spicy. It's very spicy. Into 2020, into 2021, we broke out, we back tested it, we ran, and then in June, at 17.5 thousand, we tested that high as support almost perfectly. It was very spicy. This was a reason to believe that the bottom was in. This is classical TA. What was resistance acts as support. So if you thought this was the bottom like I did, don't feel too bad. Sometimes we're wrong, right? However, we fell back below in November when we hit 15.5, and here is the spiciness. People told me, no, Tom, that's not how it works. Well, we'll see. It was resistance, and we started consolidating below that level as resistance right here. We had a perfect wick on the 5th of December that was rejected, but the lows held, and we continued to consolidate below resistance. Now, typically, that would be bearish. That's what classical TA would say, but we're not classical TAs. I don't even know what we are. We're a new breed. In crypto, in general, when I see things consolidate below resistance, they break to the upside with a higher probability than the downside. That is my own observation and experience. Unlike what traditional TA would say, they'd say that's bearish. So I guess we were right. We consolidated and broke back above. This is good. We said if we retake that 2017, if we can break that resistance, we're likely to see what? Continuation to the upside. This is pretty nice. Now, don't be fooled. We have a ton of different levels here, a ton of built-in resistance from the consolidation. And so this is not time to party quite yet. Not quite yet. I think above 412 billion up here. If we break that high, things are looking pretty good. But we did, exactly as predicted, as Carl the Moon would say, right? We broke the previous high and we continued. So I'm riding that. I'm good with that, at least for now. Let's see what our indicators are looking at on total market cap. Actually, total market cap on the day looking beastly on Market Cipher B. Shout out to Market Cipher. Momentum all the way up, a higher high in momentum. VWAP is showing a little bit of sagginess, but it hasn't quite given us like a rollover signal. And what I actually very much like about it is money flow is cleanly and healthily climbing up here. There wasn't really a low, but we had a high, a little sideways, and now we've broken that high. So BTC total market cap, not looking too bad. We're seeing buying momentum on MACD pick back up after waning for, it looks like a week, a little bit over a week, a little bit more. I'll take it. Here's something we should definitely be aware of though. So right here is 412 billion. That's the high I said. If we can take that out, things are looking better. Right here is where we are today. Now what you'll notice is RSI is very close to putting in a higher high. What we don't want to see is RSI continue to climb. Likely price will climb a little bit with it, and then price reject. What that will paint out for us then, if we have a higher high with a lower high in price, is bearish divergence on the daily, and that's no good. That's no bueno. That'd be no bueno. We don't want that. We want to see RSI either reverse here, pull back, price hopefully just trading sideways, or we want to see RSI blow up, move into overbought with price exceeding the previous high. So just looking at the chart here, that is not a super confident thing to happen, right? That is a big move, at least in proportion to what we've seen. That is a 20% increase in Bitcoin market cap. That is a lot to ask in a short amount of time. However, Bitcoin has done more before. We have seen Bitcoin climb, I believe, in 24 hours. I believe the largest climb in 24 hours was 40-something percent. 40-something percent October 2019. Didn't really get us anywhere. Wasn't that great. It was a short squeeze. But bigger things have happened here. So we're definitely going to be keeping our eye on this chart. And let's see what Bitcoin's doing. I got to go back. I'm all over the place. I'm all over the place, man. Tom, Mary, Gina. Gina, if you're out there, I know you're watching, Gina. Like, you obviously watch. Come on. Like, you're sitting there at the Fed and you're like on your phone watching this stream because we love you here. And like, why wouldn't you watch, right? It's okay. You don't have to tell anyone. She never followed me back on Twitter. It's okay. Someday, when we tweet her today and ask her to come on the show, she will. Right? With your guys' help. The Thomas Crown Affair. Exactly. Gina with the G. Exactly. Optical Art. Steve's looking for 18.6 and 19.7. Guys, go subscribe to Steve. If you haven't subscribed to Steve, great dude. Great channel. I encourage everyone to get many sides. Don't just listen to me. Despite what memes may say, don't just listen to me. Get as many opinions as you can. I'm going to put his link in the chat. Go ahead, subscribe to him. Get as many opinions as you can. Get all the information that you can. Don't just listen to one person. There's many takes out there. I'm not always right. I'm not always wrong. But the more information, the more power. The more power you have. That's right. Let's see. Who else subscribed? Annie Ruda. Carrie Chaos. Arsinus Caesar. My man. Sparkle the Great. Sparkle the Great wins today's greatest name competition. Pat yourself on the back. Mega Stu. I can't even pronounce that. EB. Mickey Rivera. Welcome, guys. Keep smashing the likes and subscribes. Keep sharing the stream. We have got just about 10 minutes. 10 minutes until the rate hike decision is in. So as a reminder, get your Googling fingers ready because this is of utmost importance. We are all going to crowdsource the interest rate hike at exactly 2 p.m. East. So that's in exactly 10 minutes. When we do this, please, if you find it, it needs to be an article that is published past 2 p.m. So it can't be something published before then because that's just an opinion. It's not the interest rate hike. And please put it in chat, but put in the source. The source is very important. I don't want people to just randomly put in numbers. We do an awesome job of this every single month, and I believe we get it first. We do it with your help. Say your name, Vivek. What's up, Vivek? How you doing, bro? Lucas. What's up, Mark Trussen? I can't even pronounce it, man. How you doing, bro? That's just like your opinion, man. Exactly. You're having a heart attack, Razvi. Razvi, Get to a doctor. 0.5 BPS it leaked. That's exactly what we don't want. We don't want leaks. We want an official news source to publish it. Oh god, if it 25 BPS. If it's 25 BPS, man, Merry Christmas to all of us. 1,000 votes, 65% of us saying it's a bull trap. You're probably right. Probably right. What I was saying earlier is we very commonly see price trend one way into the rate hike, reverse after we hear it, and then reverse again when Mr. Powell gives his speech. What I don't know is what price is going to do. What I do know is that it's likely to be very volatile. So be very careful trading today. In fact, I don't recommend trading during this. I'm being a degen with this short open. It's hanging on there by a prayer. Honestly, if this can stay open for the next 10 minutes, I think it might have a shot at closing in profit. It looks like we're like really underwater, but we're not really underwater. I mean, we are. It's red, but not as bad as it looks. That was on the 1 minute. That was on the 1 minute chart. 69 BPS confirmed. All right, I'll take it. 69, 420, 24/7. Sitting on hands. Good, Mr. Pickle. What's up, Johannes? Lewis. Steve is still here. Dude, Steve's here every month. We love him. We love him. Ryoki is in along with trailing profit stop profit. Blech, can't speak. Great. Better off than I am, man. Better off than I'm doing on this. What's up, Sweaty Dave? Tom Romans. Is that? We'd know. No, I could not. That is for post stream. I can't come out here and talk charts and be high as a kite. I would just sit here and be like, duh. I wouldn't know what to say. I get more introverted when I blaze it. What's up, Star Gamers? Michael Schroeder, Snooker Chess, 49.9 BPS. I don't know if that would make any difference. I guess it'd be better than 50. Felipe, Lewis, Carey, Justin, Crocacax, Mad Professor. What's up, brother? Jess, the beautiful Jess, is here. Sad Gamer. Don't be sad, bro. What should you do now? Be patient. Guys, remember, trading is fun. Trading can be profitable. Trading can be a tool, right? But you don't have to always be trading. This is very important. Not trading or no trade is not only a position, but it's commonly the right one. Trade should only be taken when you have the highest of confidence in whatever it is you're looking at. You should not just randomly be trading because you're bored. Well, I mean, you can if you want, but you have to be prepared to lose money. But don't feel pressured. Just because I'm trading doesn't mean you need to be trading. Just because your brother's trading, your friend's trading. Doing nothing is very often the correct move. Very often. Let's see what's moving. Speaking of the correct move, let's see what's moving. We have 6 minutes. What the heck is TON? This has been on the top gainers for like a bit now. Actually, let's do it with this one. I don't know what this is. Apparently it's been around because I keep seeing it on the top 100 gainers. Let's see what TON is. I don't own any TON. I don't know what it is. If you guys do, you can let me know in chat. Is this the whole history? That looks very interesting if it's the whole history. It does appear only to be traded on a few exchanges, which is not great. Oh, there we go, Binance. Nope. Are you showing me stuff that isn't TON? It looks like it's only traded on Huobi, KuCoin, OKX, and CoinEx. Those are not my most confident exchanges. Poloniex, Gate.io. I think Gate.io is pretty legit. Those aren't my most confident exchanges here. So, could be a bunch of BS. Let's see. I can't seem to find a history before April 22nd. That's not really a good thing. Not really a good sign. TON. Where's the longest history? We might just move on if I can't figure this out. Keep the hype going. Keep it going. Let's see, MEXC. All right, I can't find a good history for it. Search Gate.io? Sure. Good tip. There we go. Who said that? Who said that? Emioki, you're the man. Or woman, I don't know. You're the best. You the best. Gate.io does seem to be the longest history. This is a very strange chart. It only goes back to 2020, so we have a few years to work with. That's not bad. Oop, my line's gone. That is my reminder. We have 4 minutes. We have 4 minutes till the rate interest decision is in. So I'm going to probably have to cut this short. I'm going to have to cut this short. Looks like you got supported. This isn't right. This can't be the right chart. Because here it says it's trading at $2.56, and there it's trading at cents. What? What? Oh, it's on Bing X. Sweet. I guess it's on Bing X. You can trade it there. What a convenient way to shout it out. Not a lot of volume. Not a lot of depth. Huh. We're going to have to put this on hold because the interest rate decision is coming in seconds. Many seconds, but seconds. Let's pull these up. Let's get the dollar and Bitcoin going. Okay. We have about 2 minutes, so everyone open up. Ooh, I'm stopped out. Kaboom. Oh, no, don't stop me out. Don't do it. Don't do it. Oh, within just like dollars, within fractions of a percent. Make sure you're liking and subscribing. All right, guys, pull up your Google tab. Fed interest rate decision. Pull this up. I like to use this tools. I do anytime past hour. This one says 7 minutes ago. 7 minutes ago is too long. In fact, no article you find right now will be right. Well, will be good. We need to find one that's published after 2 p.m. So get your Google tabs open. Let's crowdsource it. See, the Federal Reserve is expected to announce Wednesday that it will raise its benchmark rate by 0.5% in its latest. Whew, that said last. I was like, whoa. Attempt to squash inflation. 3 minutes ago. It says stocks are trading higher. We already looked at those, buddy. They didn't look like they were trading higher. I don't know if that counts as trading higher. Yeah, that doesn't count as trading higher. Yesterday you opened higher and you closed. Now you're not even as high as yesterday. That doesn't count. So get your Googling ready. Let's see. The official clock says it's 1:58:33. We have 90 seconds. Are you ready? Are you ready? Was my stop the perfect entry? Probably. Oh! Ho, ho, ho. Every time. Oh my god. Oh my god, it's every time. It's every time. Who saw, like, how is it every time? Every time I didn't get stopped. Oh my god. Oh my god, where'd my chart go? So I was saying earlier that into these rate decisions, we typically see price trend one direction and into the rate, that direction reverse. Holy crap. Holy crap. Look at that. I still might get stopped out. This is a rodeo, man. That was a 1 minute candle. That's a 1 minute candle. Holy hell. Whoa. Come on. All right. All right, we only have seconds left. It's the 1:59:40. 20 seconds left. Start Googling. Start your Googles. Start your Googles. Holy shit. That thing went right to my stop and then just flew down. I'm glad. That would have been real crappy if I got stopped out. But we didn't. Because we're madmen. We're madmen. All right, start Googling. It's 2 p.m. Google it. Cite your source. It needs to be in the last seconds. It can't be 11 minutes ago. It can't be 7 minutes ago. It can't be 5 minutes ago. It has to be in like 1 minute. Carry Chaos is getting stoned. Go for it, bro. Get it. Get it. Abide by our local laws. Interest rate Fed decision. Give me interest rate Fed decision. I'm hearing 50 CNBC. CNBC? That's 13 minutes ago. Don't count. 38 seconds ago. This doesn't say it. Okay. 50 Twitter. Twitter's not a source. 50 hikes, not a source. Let's get a source. Twitter's not a source. Twitter's not a source. 50. 50, 50. I mean, it's probably 50. Let's be real. It's probably 50. Bloomsburg. Is it 50? The latest financial news. Boo, Bloomsburg paywalling me. 19 hours ago. Come on. Why can't I just sort by, like, newest? CNBC. It's over 9,000. I don't see any 11 minutes. Did I get stopped? I did not get stopped, sucker. Sucker. Not yet. Probably will. Probably will. Boom. Look at the dollar. Wow. Bitcoin and the dollar definitely looking like they're trading inverse again. I guess we're going to go with 50. The source is Baby Doge. Just sent me the 50. Let me pull it up. Moments ago, in its final meeting of the 2022 Federal Reserve interest rates by 50 BPS half percentage point. So not a big surprise there. No surprises. That's good. Markets don't like surprises. But now we have just, 20 minutes. 20-something minutes until Mr. CHERPOWWW speaks. So don't leave yet. I'm going to tweet. Market's wild, and I'm going to tweet that. I'm tweeting. Dang, my short, my ill-advised degen style short. It looks like it's good for now. Should have been bigger. Should have gone bigger. Here we go. I tweeted it. Are you going to come stop me, market? All right, so just as we hinted this might happen, right? We had another hint. Is we tend to see price trending in one direction into the interest rate. When we get the news, it tends to reverse whatever direction it's going. However, it tends to reverse again once CHERPOWWW starts speaking. So we may expect to see a big old heartbeat, big old flatline whipsaw. That may not be true this time. We'll find out. But god damn, did we call that? Holy shit, that was miraculous. That was like miraculous. Mr. CHERPOWWW. Save us, CHERPOWWW. My money's is worth more or less? I don't know. I guess less now? Something. Short hung on by a prayer. I messed up my settings here. Here we go. Let's update this trade. Oh, sneaky, sneaky. I should close it now. Should I close it, guys? Should I close the trade? I probably should. What do you think? I close the poll. I'm going to ask you again. Should I close the short? Yes? No. There you go. Vote quick. We don't got time. Vote quick. Should I close it? Yes? No? I'll do whatever you guys decide. Whatever you decide. Go. You got like 30 seconds. Ooh. That was so close. We got 65 yes with 400 votes. For you. Done. Successful trade. That was so degen, it wasn't even funny. Wasn't even funny. Done. Another trade in profit. Why is this? Why does it have a stop loss on position open? There we go. Well, there's another W for the books. Another W. I've been getting very lucky on stream. Very lucky. All right, let's close some of these windows. Real time. We don't need all this. Steve, the man. Look at that. Look at that snipe. Look at Steve's snipe, man. Look at this blue line. We showed this before it happened. Look at that precision. Good job, Steve. Good job. Wow. Should I have kept it open? Probably. But probably not. I said I would do whatever you guys said, so is what it is. All right. The spice is just beginning, though. Oof. Let's recalibrate. We've got 23 minutes until Mr. Chirpow, until Chirpow speaks. So don't go anywhere yet. The spice is just beginning. Look at that Darth Maul candle right there. You can see it. You guys like Star Wars? I like Star Wars. I'm a nerd. Let's re-look at everything going on. Honestly, the daily candle, not that impacted. Not that impacted. It felt like a big move, but it was really just a fast move. It wasn't really a big move. I'm going to add 17.6 to the chart here, because if we close this daily green, I could definitely see something like this playing out. Let's add Market Cipher B. That 4 hour, I can't get over it. The 4 hours just remaining positive money flow on Bitcoin. I love it. Even the hourly looks good. I'm liking these higher highs here on money flow. Higher highs and higher lows. Could see this could be it rolling over as long as we don't have our low invalidated or broken. That's still trudging up despite this really ugly candle. We are only 8 minutes into this candle, mind you. Look at 15 minute with the higher high here. Jeez. I think closing that short was the right play, actually. He said as it went lower. Volatility peak. Volatility. This is peak. Max Myth Gaming. Bro, I can't give you financial advice, dude. I do not think it is a great time to trade. I got super lucky I didn't get stopped out, like, within $1. And I went into it saying, I'm going to get stopped out. I'm going to lose money. Honestly, I'm not going to open another position. What's up, Danny Rose Stream, Wasp, Ace F, Jose Manuel, GT Fisher, Nick Friedman, Cameron Memon, Iceman, Biker Rides, Erwin Blow, Mark Truson, Karen Grover. Thanks for subscribing, everybody. If you're not subscribed yet, the show is barely even started. We have 20 minutes until Chirpow speaks, and what he says is going to be incredibly important. Incredibly important, especially with what's going on here. Bitcoin selling off and the dollar rallying is not really what we would expect with dovish talk, right? The market, we got 50 BPS, that's what the market was expecting, so no real change there, but we're seeing the dollar potentially still rally. Maybe Chirpow has some spiciness in store for us. Man, that was such a good call. Price tends to trend one direction into the interest rate decision, then reverse. Then we do see it commonly reverse again when Chirpow speaks, and we commonly end up right back where we started. That is not financial advice. Please don't trade based on that. This was super lucky I didn't get stopped out. In general, we say this is a really bad time to trade. Volatility is crazy high. Honestly, no matter what you do, you get stopped out very quickly. That 1 minute candle, 1.5% in 60 seconds. Actually, it was lower than that. 2.3% in 60 seconds. Be careful. What's up, Chuck Green, Luca? How you doing, Luca? Bernardini. Nicolaj Anderson. Thanks for subscribing, everybody. Great to have you. All the new faces in here. Make sure you jump in the Discord. We aren't done. We still have the whole speech to go. We'll be dissecting it word for word, but make sure you jump in the Discord. Make sure you jump in the Discord. We do live airdrops. You'll get some free BTC. It's not a lot, just a few sats, but I'll make you all Bitcoin holders just for being in there. All you have to do is click the green checkmark emoji to verify, and then you can keep up with our live streams. Dollar pushing a little higher, Bitcoin a little reluctant here. A little reluctant. I can't zoom in any more than the 1 minute. I guess I could. We've got the 5-second charts. 5-second charts. Don't trade the 5-second charts. 402. There we are. We've got Bitcoin and the dollar again trading inversely, at least for now. We did see a wild reversal of price on the decision publish, as we did say is very common. I wouldn't trade on it, but it is very common. But we do have another common reversal time, which is when he actually speaks, and that is just 18 minutes away. If you caught the dump, you're a good trader, Doge Digger. We caught the dump, man. Actually, we caught it before it dumped. we caught it into the dump. It was not ideal. We got so close to getting stopped. Our stop loss was I have a feeling they will. I have a feeling both of those will happen. Let's go. My long is underwater, and it does not look good. It does not look good. Set an alert under 17.7. I'm really starting to like this this Lux Algo price action concepts. I like the way I always try to like identify support and resistance, but I tend to do it a little too conservatively, maybe. I usually aim a little too high or a little too low, and this definitely does help me smooth that out. I like it. You can check out Lux Algo. You can check out our sponsors, Market Cipher, everything in the video description below. Let's see. Man, that is ugly. This is ugly, but I don't hate it. Where's our... Actually, I have an idea. See where our daily... Nice. That's what I had hoped. I had hoped for this. I hate how it does that, but our 50 daily moving average. So we moved above it today. Yesterday we actually moved above it, then closed below it. Today we moved above it, and in this sell-off we have back tested it. We've hit the liquidity around 17.8, and I'm praying for a bounce here into CHERPOWWWWWW's speech. But man, I would not trade this with any real amounts of money. I'm not trading big stacks right now. This is tiny stacks. Stacks I'm willing to lose, as all trading should be, right? All trading should be done that way. Nice. What is the Federal Reserve short? Actually just hit 1 out of 10. If you don't know what 1 out of 10 is, it's probably because you're a normal person and you don't stream on YouTube for a living. This is 1 out of 10, ranking by views. So this has gotten the most views out of the last 10 in the first 17 hours. Thanks, guys. Thank you. That's because of you. I appreciate you. If you're looking for it, I think it's pinned to the top of the chat. Let me see. I don't even know it's pinned to the top of the chat anymore. I've lost track. It is. It says, please, thumbs up for Gina. And then what is the Fed? That is the link. Uh-oh. 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 Market's coming back to take my money. I keep doing that. On the 5-second charts. Sideways. Incredibly sideways. I think everything is just waiting for CHERPOW. We have 10 minutes till CHERPOW. Don't go anywhere. 1.1 thousand likes, 1,600 viewing. I thought we'd have more than that. That's okay. This is awesome. I love these days. These are the best days. Which Lux do I use? A bunch of them. Lux Algo has a premium, and they also have hundreds of free indicators. Just go on TradingView and look up just by author. I'd highly recommend it. You'll find something useful. Steph is bored. Yeah, right? These 5-second candles, man. Usually the 5-second candles are a little more spicy than this. The market is waiting for him to speak. The dollar and Bitcoin both chilling sideways into the CHERPOWWWWWW. Dang, look at that ugly bear flag. Ugly bear flag on Bitcoin. Pretty bull flag on the dollar. All is well. Make this visible. CHERPOW. Earth from a bird's eye view. I want our hype music again. It's almost time. Yeah. Love it. Oh, Tekken replied on Twitter that TON is a Telegram token. Actually, I think I know what that is. I think I've heard of that before. Let's put on some other of our tunes while we wait. There's less than 8 minutes until Chirphausen. You know what? I'm being irresponsible. Probably I should like get that ready, huh? Wait, what? Oh, cool. Cuckoo. I should get that ready. I gotta pull this up. Let's put on Mortals while I pull up the Fed. Serve. Live stream. And there's so many competitors. So many people stealing our live streaming day of the month. I bet everything I pull up, everything I'm following, everyone's streaming it. That's okay. There can be many imitators. Then prepare for your death, Poseidon. One second. We've got 7 minutes until Chirpow. Chirpow. Chirp ow. Alright. Window capture, maybe? Hold on. Loading. I gotta hook my other monitor up. Another day. There we go. All right. We have 6 minutes. Exactly 6 minutes. Till Chirpow. Are you ready? You should be. The god of Olympus. Keep getting notifications from other influencers. Well, I mean, yeah, we made it work. You know, nobody wanted to watch these. We made them fun. Now everybody wants to cash in on it. That's just the way. That's just the way being an influencer is. It's okay. No hard feelings. They can't do it as good as us anyway. Get your own ideas. 0.75 leaked, bro. Bruh. What time does Jerome Powell speak? In less than 6 minutes. Just about 5 minutes. Chirspice is on the way. We'll put up a poll for it. Chirpow sounds. Dovish. Okish. And then I don't know what those mean. Here we go. I guess I'll put up the poll now. There's no point in voting yet because he hasn't spoken yet. So maybe hold your votes. Close the long. I forgot about the long. Let's see how our long's doing. Not good. Not good. 4 minutes. I saw Matthew Barnes, Candle Mafia for life. Frankie Candle's a cool guy. He's a good dude. Not everybody's a good dude. But some people are. Frankie Candles is one of them. Man, it's hard to bet again. Look at this money flow. That VWAP is very low, though. We are starting to look a little droopier. Starting to look much droopier. If it wasn't for this money flow, man, I'm getting stopped out. Let's be realistic. Let's be realistic. It's okay. We won one trade already. We can lose another. Chirpow, chirpow. We've got 3 minutes till Chirpow. You are from India, Amit. How you doing? Shout out to India and to you, Amit. What's up, Josel? How you doing? We are minutes away from CHERPOW. Literally minutes, like 3 minutes. What's up, the captain? Motivation. Manifestation. Subscribed. Euro dollar 2006. Rio. Magalona. Too easy. Gary 1. Stefan Dragsevic. Abu Bakar. Ibrim Barata. Sorry if I butchered that. Chad Garber. How you guys doing? Thanks for subscribing. Good to have you here. CHERPOW will be speaking momentarily. We have a long open. It's a terrible idea. I'm probably going to lose money. That's okay. Hawkish is your vote. Well, we don't know yet. It's good that 270 of us are already voting. Let me turn the audio on for this. Let's see. Cut ours. Oh, let me do it this way. Oh, that's some cheery music. Man, they're really stepping up their production game for the Fed meeting. Listen to these wonderful tunes. Wow. Wow. 2-minute warning. 2 minutos. This music does sound dovish. It's like everything's okay. You're gonna be alright. Yeah. Clap. Clap. CHERPOW's gonna come out and just rip off his shirt and be like, everyone's gonna die. Just freak everyone out after this music. I could see it. The economy's over. do, 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 do. 1 minute. Gotta turn that down. Wow, really soothing. They don't usually have like music like this before them. Maybe it's a sign. It's a sign. "30 seconds, guys. 30 seconds. Quick recap, quick reminder. What we're going to be looking for here, because we know the BPS hike, it's 50. Not a surprise. Market's not surprised. What we're going to be looking for is the forward guidance. How does the Fed view the conditions currently? How long do they expect these conditions to be? Do they expect them to change soon? Do they expect to continue interest rate hikes? Are they going to be aggressive? Are they going to, et cetera, et cetera? We got a lot. Shh, it's starting. Look, I'm there. I'm here at the Fed meeting. Mr. CHERPOW, I have a question. Can I question before you start? That guy wanted to ask a question. You're late, buddy. You're late? You think just because you're the Fed president, you could be late? It's really rude. It's really, really rude. We have 2,000 people watching, waiting for you, and you're late. I mean, these things are scheduled out a year in advance. How are you late? What were you doing? There you are. There you are. About time. All right, shh, he's talking.
Good afternoon.
Good afternoon.
Before I go into the details of today's meeting, I'd like to underscore for the American people that we understand the hardship that high inflation is causing and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt.
Not
Even
good.
so, we have more work to do.
Good start.
Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
Okay.
Today, the FOMC raised our policy interest rate by a half percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
Not good.
In addition, we're continuing the process of significantly reducing the size of our balance sheet.
Hawkish.
Restoring price stability will likely require maintaining a restrictive policy stance for some time.
Ooh, that sucks.
I'll have more to say about today's monetary policy actions after briefly reviewing economic developments.
That's a pretty hawkish start. Not great.
The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.5% this year and next, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate near a 50-year low, job vacancies still very high, and wage growth elevated.
Very, very hawkish.
Job gains have been robust, with employment rising by an average of 272,000 jobs per month over the last 3 months. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers.
Bad.
The labor force participation rate is little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices.
Bad.
The median projection in the SEP for the unemployment rate rises to 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in October, total PCE prices rose 6%,
I'm getting
excluding the volatile food and energy categories. Core
out.
PCE prices rose 5%. In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has contributed to upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.6% this year and falls to 3.1% next year, 2.5% in 2024, and 2.1% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
Gina?
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a half percentage point, bringing the target range to 4.25% to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.25 percentage points this year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Over the course of the year, financial conditions have tightened significantly in response to our policy actions. Financial conditions fluctuate in the short term in response to many factors, but it is important that over time they reflect the policy restraint that we're putting in place to return inflation to 2%. We are seeing the effects on demand in the most interest-sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous 4 meetings. Of course, 50 basis points is still a historically large increase, and we still have some ways to go.
There it is.
As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 5.1% at the end of next year, a half percentage point higher than projected in September. The median projection is 4.1% at the end of 2024 and 3.1% at the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We are taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done.
No bueno. Questions?
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
That's not good. That's all hawk.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You just talked about the importance of market conditions reflecting the policy restraint you put in place. Since the November meeting, the 10-year has declined by 60 basis points. Mortgage rates have come down. High-yield credit spreads have come in. The economy has accelerated, and the stock market's up 6%. Is this loosening of financial conditions a problem for the Fed in its effort and its fight against inflation? And if so, do you need to do something about that, and how would you do something about that? Thank you.
So as I mentioned, it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place to bring inflation down to 2%. We think that financial conditions have tightened significantly in the past year, but our policy actions work through financial conditions, and those in turn affect economic activity, the labor market, and inflation. So what we control is our policy moves and the communications that we make. Financial conditions both anticipate and react to our actions. I would add that our focus is not on short-term moves, but on persistent moves, and many things, of course, move financial conditions over time. I would say it's our judgment today that we're not at a sufficiently restrictive policy stance yet, which is why we say that we would expect that ongoing hikes would be appropriate. And I would point you to the SEP, again, for our current assessment of what that peak level will be. As you will have seen, 19 people filled out the SEP this time, and 17 of those 19 wrote down a peak rate of 5% or more, in the fives. So that's our best assessment today for what we think the peak rate will be. You will also know that at each subsequent SEP during the course of this year, we've actually increased our estimate of what that peak rate will be. And today, the SEP that we're published shows that, again, that overwhelmingly FOMC participants believe that inflation risks are to the upside. So I can't tell you confidently that we won't move up our estimate of the peak rate again at the next SEP. I don't know what we'll do. It will depend on future data. What we're writing down today is our best estimate of what we think that peak rate will be based on what we know. Obviously, if the inflation data come in worse, that could move up, and it could move down if inflation data are softer.
Gina. Gina Smilek, New York Times. Thanks for taking our questions.
Shut up.
The SEP, like you mentioned, suggests that the Fed will be making another 3/4 percentage points worth of rate increases in 2023. I wonder if you would foresee that being in 25 basis point increments, 50 basis point increments, sort of how you see the speed playing out going forward. And then I wonder what you're looking at as you determine when to stop.
Yeah.
Beautiful question.
So, as I've been saying, as we've gone through the course of this year, as we lifted off and got into the course of the year, and we saw how strong inflation was and how persistent, it was very important to move quickly. In fact, the pace with which we were moving was the most important thing. I think now that we're coming to the end of this year, we've raised 425 basis points this year, and we're into restrictive territory. It's now not so important how fast we go. It's far more important to think, what is the ultimate level? And then at a certain point, the question will become, how long do we remain restrictive? That will become the most important question. But I would say the most important question now is no longer the speed. So, and that applies to February as well. So I think we'll make the February decision based on the incoming data and where we see financial conditions, where we see the economy. And that'll be the key thing. But for that decision. But ultimately, that question about how high to raise rates is going to be one that we make looking at our progress on inflation, looking at where financial conditions are, and making an assessment of whether policy is restrictive enough. I've told you today we have an assessment that we're not at a restrictive enough stance, even with today's move, and we've laid out our individual assessments of what we would need to do to get there. At a certain point, though, we'll get to that point, and then the question will be, how long do we stay there? And the strong view on the committee is that we'll need to stay there, until we're really confident that inflation's coming down in a sustained way, and we think that will be some time. Now, why do I say that? If you look at you can break inflation down into three sort of buckets. The first is goods inflation, and we see now, as we've been expecting really for a year and a half, that supply conditions would get better, and ultimately supply chains get fixed, and demand settles down a little bit and maybe goes back to services a little bit, and we start to see goods inflation coming down. We're now starting to see that in this report and the last one. Then you go to housing services. We know the story there is that housing services inflation has been very, very high and will continue to go up, actually, as rents expire and have to be renewed. They're going to be renewed into a market where rates are higher than they were when the original leases were signed. But we see that the new leases that the rate for new leases is coming down. So once we work our way through that backlog, that inflation will come down sometime next year. The third piece, which is something like 55% of the index, PCE, core inflation index, is non-housing related core services. And that's really a function of the labor market largely. The biggest cost by far in that sector is labor. And we do see a very, very strong labor market, one where we haven't seen much softening, where job growth is very high, where wages are very high, vacancies are quite elevated, and really there's an imbalance in the labor market between supply and demand. So that part of it, which is the biggest part, is likely to take a substantial period to get down. The goods inflation has turned pretty quickly now, after not turning at all for a year and a half. Now it seems to be turning, but there's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it, so that we may have to raise rates higher to get to where we want to go. And that's really why we are writing down those high rates and why we're expecting that they'll have to remain high for a time.
Go back to Gina, please.
Howard Schneider with Reuters. Thanks for taking the question. You described GDP growth in the SEPs as moderate or modest, I believe, yet it's really approaching stall speed. Half a percentage point is not much. You described labor market unemployment rate as representing some softening, but it's nearly a full percentage point rise, and that's well in excess of what has historically been associated with recession. Why wouldn't this be considered a recessionary projection by the Fed?
Well, I'll tell you what the projection is. I don't think it would qualify as a recession, no, because you've got positive growth. The expectations in the SEP are basically, as you said, which is we've got growth at a modest level, which is to say about a half a percentage point. That's positive growth. It's slow growth. It's well below trend. It's not going to feel like a boom. It's going to feel like very slow growth, right? In that condition, labor market conditions are softening a bit. Unemployment does go up a bit. I would say that many analysts believe that the natural rate of unemployment is actually elevated at this moment. So it's not clear that those forecasts of inflation are really much above the natural rate of unemployment. We can never identify its location with great precision. But that 4.7% is still a strong labor market. If you look, you've got the reports we get from the field are that companies are very reluctant to lay people off, other than the tech companies, which is a story unto itself. Generally, companies want to hold on to the workers they have because it's been very, very hard to hire. So, and you've got all these vacancies out there far in excess of the number of employed people. That doesn't sound like a labor market where a lot of people will need to be put out of work. So that there are channels through which the labor market can come back into balance with relatively modest increases in unemployment, we believe. None of that is guaranteed, but that is what their forecast reflects.
Nick.
Back to Gina, please. Does anyone ask any questions?
Thanks, Nick Temeros, the Wall Street Journal. Chair Powell, I want to follow up on Gina's question. The decision to step down the pace of rate rises appears to have been socialized at your last meeting, largely before the past two CPI reports showed inflation decelerating in line with the committee's forecast this year. You just now talked about making decisions meeting by meeting and being mindful of the lags of policy. Does that mean, all things equal, you would feel more comfortable probing where the terminal rate is by moving in 25 basis point increments, including beginning at your next meeting?
So I haven't made a judgment on what size rate hike to make at the last meeting. But what you said is broadly right, which is having moved so quickly and having now so much restraint that's still in the pipeline, we think that the appropriate thing to do now is to move to a slower pace. And that will allow us to feel our way and and get to that level, we think, and better balance the risks that we face. So that's the idea. It makes a lot of sense, it seems to me, particularly if you consider how far we've come. But again, I can't tell you today what the actual size of that will be. It will depend on a variety of factors, including the incoming data in particular, the state of the economy, the state of financial conditions.
With the CPI report, if it had come out last week, do you think it would have changed some of those forecasts in today's SEP?
No, absolutely not. No, as just a matter of practice, the SEP reflects any data that comes out during the meeting, and participants know that they can make changes to their SEP during the meeting, well in advance of the press conference so that we're not running around. But that's not the case. It's never the case that the SEPs don't reflect an important piece of data that came in on the first day of the meeting.
Thanks. Rachel?
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I'm wondering if we could talk about the projection for the unemployment rate. Why has the Fed raised its unemployment projection? Is it because the model suggests that a higher terminal rate would automatically cause a higher unemployment rate? Or are you seeing signs that the labor market isn't quite as strong as we think it is now? Thanks.
No, it's not about the strength of the labor market. The labor market is clearly very strong. It is more just that, by now, we've continually expected to make faster progress on inflation than we have ultimately, and that's why the peak rate for this year goes up between this meeting and the September meeting. You see the fact that we've made less progress than expected on inflation, so that's why that goes up, and that's why unemployment goes up, because we're having to tighten policy more. And so it didn't go up by much in the meeting, I don't think, but that's the idea, is slower progress on inflation, tighter policy, probably higher rates, probably held for longer, just to get to where the kind of restriction that you need to get inflation down to 2%.
Do you have a sense of, in order to get to that number, how much of that could be caused by layoffs versus vacancies trimming or changes to the labor force population rate?
So it's very hard to say. You can look at history, right? And history would say that in a situation like this, the declines in unemployment would be more meaningful, I think, than what you see written down there. But why do we think that is the case? So I'll give you a few reasons. First, just is that there's this huge overhang of vacancies, meaning that vacancies can come down a fair amount, and we're hearing from many companies that they don't want to lay people off, so that they'll keep people because it's been so hard. I mean, I think it feels like we have a structural labor shortage out there, where there are 4 million fewer people, a little more than 4 million, who are in the workforce available to work than there's demand for workforce. So the fact that there's a strong labor market, means that companies will hold on to workers, and it means that it may take longer, but it also means that the costs in unemployment may be less. Again, that we're going to find out empirically, but I think that's a reasonably possible outcome, and you do hear many labor economists believe that it is. So we'll see, though.
Colby?
Thank you. Colby Smith with the Financial Times. How should we interpret the higher core inflation forecast for 2023 in the SEP? Does that not then suggest that the policy rate currently forecasted for next year should actually be higher than the 5.1 medium estimate penciled in?
Well, I think that's why one of the reasons it went up was that core came in stronger this year. Yeah, what you see is our best estimate as of today, for how high we need to raise rates, to how much we need to tighten policy to create enough, restrictive policy to slow economic activity and soften the labor market and bring inflation down through those channels. That is the estimate, best estimate we make today. And as I mentioned, we'll make another estimate for the next SEP, and we'll, of course, between meetings we do the same thing, but we don't publish it.
Victoria?
Hi, Victoria Guida with Politico. I wanted to make sure I understand specifically what's going on in the SEP, because you all expect rates to go higher, but you're also more pessimistic about what inflation is going to look like next year. And I was just wondering, given that we have seen some cooling in inflation, is that primarily because of wage growth, that you expect wage growth to be sort of a headwind?
And we're going into next year with higher inflation than we had thought. Right, so we're actually moving down to the level that we're moving down to next year is still a very large drop in inflation from where inflation is running now, well more than a 1% change in inflation. But remember that the jump-off point at the beginning of the year is higher. So we're moving down still by a very large chunk. I don't think the policy's having any less effect. It's just starting from a higher level at the end of 2022. So we're getting down. I believe the median is 3.5%. That's a pretty significant drop in inflation. And where's it coming from? It's coming from the goods sector, clearly. By the middle of next year, we should begin to see lower inflation from the housing services sector. And then, the big question is how much will you see from the largest, the 55% of the index, which is the non-housing services sector. And, that's where you need to see, we believe you need to see a better balancing of supply and demand in the labor market so that you have, it's not that we don't want wage increases. We want strong wage increases. We just want them to be at a level that's consistent with 2% inflation. Right now, if you factor in productivity estimates, standard productivity estimates, wages are running, well above what would be consistent with 2% inflation.
Neil.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. Some of your colleagues have been pretty explicit that they can't imagine rate cuts happening in 2023. That's certainly not implied by the SEP. But futures markets have priced in some easing in the back half of next year. What's your view of the likelihood of any kind of rate cuts next year? What circumstances might make that plausible?
Our focus right now is really on moving our policy stance to one that is restrictive enough to assure a return of inflation to our 2% goal over time. It's not on rate cuts. And we think that we'll have to maintain a restrictive stance of policy for some time. Historical experience cautions strongly against prematurely loosening policy. I guess I would say it this way. I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way. So that's the test I would articulate. And you're correct. There are not rate cuts in the SEP for 2023.
Steve Matthews with Bloomberg. Let me ask you about China. In the last few weeks, China has abandoned its COVID policy and been reopening pretty strongly. I'm wondering if you see that as disinflationary because you're seeing supply chains improve, or inflationary because it obviously brings a lot more demand globally, improves the global outlook for growth and for commodities prices.
And so you're right. Those two things will offset each other. Weaker output in China will push down on commodity prices, but it could interfere with supply chains ultimately, and that could push inflation up in the West. It's very hard to say, how those two will offset each other, and it doesn't seem likely actually that the overall net effect would be material on us. But to your point, China faces a very challenging situation in reopening. And we've seen waves of COVID all around the world can interfere with economic activity. China, a very critical manufacturing place for manufacturing and exporting. Their supply chain is very important. And China faces a reopening. They've backed away from their COVID restriction policies. There could be very significant increases in COVID, and we'll just have to see. It's a risky situation. But again, it doesn't seem like it's likely to have material overall effects on us.
Chris.
Hi, Chris Rugaber at Associated Press. Thank you for taking my question. I wondered if you could comment a bit more about yesterday's inflation report. I mean, it showed inflation cooling in all three of the categories that you laid out at Brookings. Are you confident that you're seeing real progress on getting inflation under control? Are you still worried it could slip into some kind of unentrenched, upward spiral? Thank you.
Right. So the data that we've received so far for October and November, we don't have we have some remaining data to get in November, but they clearly do show a welcome reduction in the monthly pace of price increases. As I mentioned in my opening statement, it will take substantially more evidence to give confidence that inflation is on a sustained downward path. So the way we think about this is this. This report is very much in line with what we've been expecting and hoping for. And what it does is it provides greater confidence in our forecast of declining inflation. As I mentioned, we've been forecasting significant declines in overall inflation and core inflation in the coming year. And this is the kind of reading that it will take to support that. So really this gives us greater confidence in our forecast rather than at this point changing our forecast. In terms of the pieces, we have been expecting goods inflation to come down as supply chain pressures eased. That's happening now. Housing services, as I mentioned, there is good news in the pipeline. As long as new housing leases show declining inflation, that will show up in the measure around the middle of next year, so that should help. And the big piece, again, is core services ex housing, which is very important, and we have a ways to go there. You do see some beginning signs there, but ultimately that's that more than half, as I mentioned, of PCE core index, and it's very fundamentally about the labor market and wages. If you look at wages, look at the average hourly earnings number we got with the last payrolls report. You don't really see much progress in terms of our average hourly earnings coming down. Now there may be composition effects and other effects in that, so we don't put too much weight on any one report. These things can be volatile month to month, but we'll be looking for wages moving, down to more normal levels where workers are doing well and ultimately their gains are not being eaten up by inflation.
Michael King.
Michael McKee from Bloomberg Radio and Television. There's a little bit of a disconnect between the optimistic view you just expressed about the economy and the changes that you've made in the SEP. And I'm wondering if you're reacting to the fact that the markets have loosened financial conditions, or if you feel the Fed may be a little bit behind on inflation, whether the recent disinflation we're seeing is transitory or not, and how this affects the idea of a soft landing if you're projecting just 0.5% growth for this year.
So, if I think I got your question. So, one thing is to say is I think our policies in getting into a pretty good place now. We're restrictive, and I think we're getting close to that level of sufficient, we think, sufficiently restrictive. We laid out today what our best estimates are to get there. It boils down to how long do we think this process is going to take? And of course, we welcome these better inflation reports for the last 2 months. They're very welcome, but I think we're realistic about the broader project. So that's all. That's the point I would make. It's, we see goods prices coming down. We understand what will happen with housing services, but the big story will really be the rest of it, and there's not much progress there, and that's going to take some time. I think my view and my colleagues' view is that this will take some time. We'll have to hold policy at a restrictive level for a sustained period, so that two good monthly reports are very welcome. Of course, they're very welcome, but I think we need to be honest with ourselves that there's, inflation, 12-month core inflation is 6% CPI. That's 3 times our 2% target. Now, it's good to see progress, but let's just understand we have a long ways to go to get back to price stability.
Well, do you think the soft landing is no longer achievable?
No, I wouldn't say that. No, I don't say that. I would say this, to the extent we need to keep rates higher and keep them there for longer, and inflation, moves up higher and higher, I think that narrows the runway. But lower inflation readings, if they persist in time, could certainly make it more possible. So I don't think anyone knows whether we're going to have a recession or not, and if we do, whether it's going to be a deep one or not. It's not knowable, and certainly, lower inflation reports, were they to continue for a period of time, would increase the likelihood of a, so I would put it this way, of a return to price stability that involves significantly less of an increase in unemployment than would be expected given the historical record.
Ryan.
Hi, Chairman Powell. Brian Chung, NBC News. You warned Americans of pain earlier this year as the Fed hikes rates, but with the Fed now expected to raise rates higher than you thought when you first said that, just wondering where we are in that pain. How would you describe that to Americans if the projections on unemployment find themselves? That would be 1.6 million Americans out of jobs.
So the largest amount of pain, the worst pain, would come from a failure to raise rates high enough and from us allowing inflation to become entrenched in the economy so that the ultimate cost of getting it out of the economy would be very high in terms of unemployment, meaning very high unemployment for extended periods of time, the kind of thing that had to happen when inflation really got out of control and the Fed didn't respond aggressively enough or soon enough in a prior episode, 50 years ago. So that's really the worst pain would be if we failed to act. What we're doing now is, it's raising interest rates for people. And so people are paying higher rates on mortgages and that kind of thing. There will be some softening in labor market conditions. And I wish there were a completely painless way to restore price stability. There isn't. And this is the best we can do. I do think, though, that and markets are pretty confident, it seems to me, that we will get inflation under control, and I believe we will. We're certainly highly committed to do that.
Grady.
Thank you, Mr. Chair. Grady Trimble with Fox Business. You've reiterated today, and the committee has reiterated its commitment to that 2% inflation target. I wonder, is there ever a point where you actually reevaluate that target and maybe increase your inflation target if it is stickier than even you think it is?
That's just so changing our inflation goal is just something we're not thinking about. It's not something we're not going to think about. We have a 2% inflation goal, and we'll use our tools to get inflation back to 2%. I think this isn't the time to be thinking about that. I mean, there may be a longer run project at some point, but that is not where we are at all. The committee, we're not considering that. We're not going to consider that under any circumstances. We're going to keep our inflation target at 2%, and we're going to use our tools to get inflation back to 2%.
Nicole.
Thank you, Chairman Powell. Nicole Goodkind, CNN Business. As you monitor wage growth and unemployment data, I wonder if you're paying close attention to a sector or even income level. Like, how do you factor potential exacerbations of inequality into your risk calculations, especially given the K-shaped recovery of 2020?
So I would go back to the labor market that we had in 2018, 19, 20. So what that looked like was wage increases for the people at the lowest end of the income spectrum were the largest. The gaps between racial groups and gender groups were at their smallest in recorded history. All of that because of a tight labor market. A tight labor market which had inflation running, just a tick below 2%, and the economy growing right at its potential. So that seems like something that would be really good for the economy and for the country if we could get back to that. And so that's what all of us want to do. We want to get back to a long expansion where the labor market can remain strong over an extended period of time. That's a really good thing for workers in the economy, and we'd love to get back to that. That's what our goal is. There's in the near term, we have to use our tools to restore price stability, but we can't. What we have to think about is the medium and longer term. If you think about it, the country went through a difficult time. I think much more difficult than we can think it would happen here, but it really set up our economy for several decades of prosperity. So price stability is something that really pays dividends for the benefit of the economy and the people in it over a very, very long period of time. And so when it is lost for whatever reason, it has to be restored, and as quickly as possible, which is what we're doing.
It must be found.
Are you factoring in these potential exacerbations in the economy? Are you monitoring?
We do, yes, we absolutely do. We look at, it's our regular practice to talk about unemployment rates by different groups, including racial groups and that sort of thing. We do. We keep our eye on that.
Nancy.
Hi, Nancy Marshall-Genzer with Marketplace. What would you do if the economy slows so much that we enter a recession before we see strong, consistent signs that inflation is slowing? In other words, stagflation.
Mr. Powell, what if dinosaurs are still
So
around?
I don't want to get into too many hypotheticals, but it's hard to deal with hypotheticals. So let me just say that we have to use our tools to support maximum employment and price stability. I've made it clear that right now the labor market's very, very strong. You're at near a 50-year low. You're at or above maximum employment. in 50-year low in unemployment. Vacancies are very high. Nominal wages are very high. So the labor market is very, very strong. Where we're missing is on the inflation side, and we're missing by a lot on the inflation side. So that means we need to really focus on getting inflation under control, and that's what we'll do. I think as the economy heals, the two goals come more into play. But right now, clearly the focus has to be on getting inflation down.
Greg.
Greg?
Thank you,
Mr.
Chairman
Powell, I
Powell.
second
Greg
that
Robbs from MarketWatch. You spoke a little bit ago. You said that the U.S. it looks like we have a structural labor shortage in the economy. Could you expand on that? Talk a little bit more about that. And really, are you talking about getting Congress action on increasing like legal immigration, things like that? Thank you.
So what I meant by that with structural labor shortage is if you look at where we are now, as I mentioned. If you just look at demand for labor, you can look at vacancies plus people who are actually working, and then you can take supply of labor by are you in the labor market? Are you looking for a job or have a job? And you're more than 4 million people short. We don't see, despite very high wages and an incredibly tight labor market, we don't see participation moving up, which is contrary to what we thought. So the upshot of all that is the labor market is actually. It's 3.5 million people at least smaller than it should have been based on pre-pandemic, just assume population and reasonable growth and aging of the population. Our labor force should be 3.5 million more than it is. And that there are lots of easy ways to get to bigger numbers than that if you go back a few more years. So why is that? Part of it is just accelerated retirements. People dropped out and aren't coming back at a higher rate than expected. Part of it is that we lost 500,000 people who would have been close to 500,000 who would have been working, who died from COVID. And part of it is that migration has been lower. We don't prescribe, it's not our job to prescribe things, but I think if you ask businesses, pretty much everybody you talk to says there aren't enough people. We need more people. So I tried to identify that in a speech I gave a month ago, but I stopped short of telling Congress what to do because, they gave us a job and we need to, do that job.
Thanks. Jennifer?
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You say you expect growth of just 0.5% next year. Given that you've said the process of raising rates and getting inflation back under control will be painful, have you had discussions within the committee and addressed how long and or how deep of a recession you would be willing to accept?
No. I mean, what we do is we make our forecasts and we publish them quarterly. And if you look at those forecasts, those are forecasts for slow growth, for a softening labor market, by which I mean unemployment goes up, but not a great deal. And you see inflation coming down. You see rates going up a lot. You see inflation coming down. Those are those forecasts, and that's really what they show. We're not. We all, of course, we don't. Talk about this kind of a recession and that kind of a recession. We make those forecasts. The staff runs, and you will see this if you look at the old Teal books, runs alternative simulations of all different kinds at every meeting, and we look at those too. And those will explore different things. But that's just upside and downside scenarios. Of course, that's responsible practice that we've carried on for many decades. But no, we don't. We haven't asked ourselves that question.
We'll go to Jean for the last question.
The last question.
Hi, Jean Young with Market News. I wanted to ask about the SEP again. If you are reaching peak rates around 5% in the first half of next year and inflation starts to decline materially, that would seem to make the real rate gradually more restrictive. Is that something that's built into the projections and into models? Is that something you would want to see?
So we do know that, of course. That's something that we know and we'd see. But as I mentioned, we wouldn't. I wouldn't see the committee cutting rates until we're confident that inflation is moving down in a sustained way. That would be my test. I don't see us as having a really clear and precise understanding of what the neutral rate is and what real rates are, so that would mechanically happen like that. It'll be a test of for cutting rates. I think in the event it'll be a question of, do we actually feel confident that inflation is coming down in a sustained way? Thank you very much.
Mr. Chair Powell, what if dinosaurs are real? What if they were still around? Do you be able to ride a dinosaur like a horse? I don't deal in hypotheticals. Well, that was really, really hawkish. Way hawkisher than I had hoped for. Not great for markets. Surprisingly, the dollar ended lower than it started. Our FOMC TA, pretty good. We didn't get the upward move after the CHERPOW, but we got the uptrend into the downtrend. Maybe we'll see this move back up to 18.1. Dollar trending down. As soon as the interest rate decision was made, it went up. Then CHERPOW started speaking, it went down. So I'll say exactly as predicted. Not financial advice. These are just rough estimates that just an observation tends to happen. This was pretty dope. Those questions went on forever. It was annoying, but another FOMC down in the books. We'll have the next one scheduled in 2023. Thanks for joining us, guys. Make sure you jump in our Discord before we do the airdrop. You'll get some free sats just for being in there. That's right. I'll make you all holders. Check out our sponsors in the video description below. And until next time, I love you, Gina. I love you, Gina.